Good morning, everyone. Hello, hello. Welcome to another morning market update. I hope everyone's doing well. Today is Thursday. Oh, I got to sneeze. Oh, well. Sorry. I apologize. It's live. I can't do anything about it. But good morning. Hope everyone is doing well and is ready for Thursday. We have today and tomorrow to wrap up the week here in the first full week of December in the market. And we don't have necessarily that much news, right? Overall, the market's been slipping a little more this week, and there hasn't really been much of a catalyst that's really propelling this. There are some news things that did happen overnight yesterday that we could talk about, but retrospectively, we don't really have a main catalyst that is pressing the downside. Now, some of the news I want to quickly talk about here because I want to put a little more focus on what is going on with the market, what we had talked about yesterday, and what we could look at today, right? The bulls are trying here pre-market this morning. Let me make sure that's still true. Yes, it is. And let's take a look at what we've got cooking here. So overall, in terms of news, there really hasn't been that much, right? Saudi Arabia has rolled out the red carpet for Chinese President Xi Jinping, and he arrived in the country for a 4-day visit. Xi's plane was also escorted by Saudi fighter jets on the way to Riyadh. And while he was greeted at the airport with the capital's governor and the Saudi foreign minister, it starks a pretty big contrast when President Biden was set to visit the country in July after previously pledging to make a pariah out of what had happened with Khashoggi a few years back. Now, in terms of the bigger picture, after much debate within the administration, Biden eventually decided to visit Saudis amid an energy crisis at home and a need to reassert American leadership in the region. Now, Beijing is viewing trip through much of the same lens as it expands its sphere of influence. For Saudi Arabia, China has heavily outpaced the U.S. as its largest trading partner since 2016. And while the kingdom has historically relied on American military aid under oil security policies, the times may be changing. So the U.S. shale industry has also eliminated the need for a lot of Middle Eastern oil, while China has subsequently become Saudi's top crude customer. So economically speaking, some $30 billion worth of agreements are expected to be signed, including energy and infrastructure deals. And the sectors that could benefit from this in the U.S., right, are going to be blacklisted firms like telecoms, equipment giant Huawei Technologies. And also the two sides are also expected to coordinate China's Belt and Road Initiative with Saudi Arabia's vision of a 2030 development plan, while talks of a free trade agreement between China and the Gulf Cooperation Council are entering into their final stage. So it doesn't necessarily affect the U.S. market too much. And then something else that might have something to do with some of this upside is there has been news in tech, right? The Pentagon has finally made some decisions about upgrading its cloud infrastructure following years of delays, legal challenges, and shifting priorities. Amazon Web Services, AMZN, Google, Microsoft, and Oracle will each get a piece of the joint warfare cloud or war fighting cloud capability contract, which has a shared ceiling of $9 billion. So the competition was intense to scoop up the share of JWCC deal, which will be awarded in parts. It has a total estimated completion of June 2028. So the joint warfighting cloud capability succeeds an earlier contract known as the Joint Enterprise Defense Infrastructure, also known in the industry as JEDI, that sought to build a large common cloud for the entire Defense Department. Now, Amazon Web Services was considered to be the frontrunner for JEDI, before the DoD handed it to Microsoft in October 2018. I don't know if you remember that, but AWS didn't back down, and the company allegedly ran into lawsuits that would award. That the award was tainted by President Trump's animus against Jeff Bezos, and related litigation threatened to delay it for some years. So there is some pop in tech, right? There is some pop in the overall market here overnight. And I think that this is one of the days where we could start to see some of that rally. Remember, yesterday we talked about a very, very important area, the 3955 region or so on the futures. And that held extremely well yesterday, with multiple sells from that area resulting in tens and 20s of points. Now, to flip the script here, we have an area on the SPY 394, which is a gamma hedge ledge, a gamma hedge spike at 394 on the SPY, which is much lower than where price is currently. It was a very, very key support in yesterday's price action, and we're well above that. So that could lead into some bullishness, especially how we're reacting right now, moving above that 3955 here on the futures. Now, there are a few different things I want you guys to watch today as we enter Thursday. There's a level at 3965. Now, the key here is as long as we can hold the 3952 to 55 region, that 3-point area, as long as I can manage a support, we're coming out of the range that's been established over the last few sessions based on volume, and we are expected to see much more of a rally to the upside where we could entertain the areas like the 3970s and also the 3990s, which is a huge start for a distribution back to the upside. After failing multiple attempts, two main attempts down at 3915 or so. Even last night, we reject that area very swiftly, and now we're up another 50 handles from the region. So what's looking up right now is we want to see that mid 50 hold out on the futures to see if we can get that push to the upside. The gamma wall has been brought down here pre-market. We'll see how that shapes up. But realistically, I am leaning a little more to the buy side here, as there are a lot of things that are looking for smaller, shorter term reversal to the upside, one of them being the triple Qs, the tech heavy ETF. If we get that push above the 382 like 50 or so, that region 382.30, and we get a very aggressive move above that, we're going to see buy stops. Another thing is Nvidia. You can watch Nvidia for that buy stop run as well. It's already started above 161.50, and naturally Tesla is one to watch as well, because we've been getting a lot of downside movement in Tesla, and the thing cannot catch a bid. There was some news from Bloomberg. Let me see if I can dig it up for you. It says that Elon Musk bankers are considering providing the billionaire with new margin loans backed by Tesla stock to replace some of the high interest debt that was layered on at Twitter. So according to the people with knowledge on the matter, this is the case. So the margin loans are one of several options the Morgan Stanley led bank group and Musk's advisors have discussed to soften the burden of the $13 billion of debt that Twitter took on as part of Musk's $44 billion acquisition. So said the people who asked not to be identified because the discussions are still confidential. So we're going to see there's still some downside pressure here on Tesla, and I'm going to be watching that if it can reverse with this market. But realistically, it's not the best of news. So keep that in mind. We're coming into some key resistance areas, 3965 or so. That continuously fails, and we failed to hold 3955. We could get back into the range, and we could slop and chop into the end of this week, as we have a very, very big Friday coming up with PPI. Also, we have the CPI and the Fed announcement next week, so we're probably leaning into a little more subdued period of volatility, expecting movement from those main events. So with that being said, I hope everyone enjoyed this, had a great Wednesday. Let's get ready for a great Thursday, and let's wrap up this week strong, and I'll see you guys tomorrow. Thank you, and take care.